Yeah, I can hear you.
I'm sorry, I was testing the microphone. But I actually have a question.
Excellent.
What is your what is your preferred trading style?
Just day trading is my preferred style. I like to come in every day and look at do the top down analysis. So start from the higher time frames, like a monthly, weekly, daily, 4 hour, and just look for opportunities and see what's going on and follow on from the day before and maybe the week before and just keep tabs on what's going on, and if there's an opportunity, get in, make some money, and then be done. So, pound dollar yesterday, long from 136 to 137. It gave us a 100 pip move. Finished off this morning. I banked along the way, and I trailed the stop loss, and so that was me doing a trade. And then there was another opportunity with the a similar bit of price action, I guess, with the euro dollar. That gave us a decent retrace up to 38.2. So I took it long, and that was a simple sort of day trade, taking got in at around 90, 121.90. So that gave us about 25 pips, a bit of extra really. So yeah, that's it. So probably made, I don't know, about 5% or so off the top of my head. I need to update the journal. Yeah, that's it. So I think, generally, what do we have to do now? Nothing. Don't have to do anything else for the week. And so what I'll do is I will cherry pick. So in terms of style of trading, I will look at gold and I'll say, if it breaks 1862, where it's tested twice, three times and curled over, if eventually we get above there, I'll entertain some bullish bias and maybe take a long on it. Take it up to about 70, 1870. But otherwise, yeah, I won't do anything else. Um, Yeah, I think that's how you have to kind of think, don't you? You have to kind of wait for opportunities to come to you, rather than you go chasing. I don't know if they call that swing trading, day trading, or anything. I just think it's about routine and habit. And I was just speaking to a trader, an ex trader from a bank. Was just saying about the fact that traders today, they come in and they should just scrap everything in terms of lower time frames. Don't look at the 1 minute, 5 minute, 15 minute, 30 minute, 1 hour. Just do away with all of that. With all of that, look at the macro picture. So understand what's going on with the dollar. So fundamentally understand, you know, if President Biden gets in eventually and sorts stuff out, is he going to authorise the stimulus package? 3 trillion. I've heard the 3 trillion is going to be pumped into an already broken system, and how is that going to affect the U.S. currency? And are we going to see it completely devalued to a point where it's not worth anything? And how many times can they keep doing it? And are interest rates ever going to go up? And so you ask yourself these questions not because you want to be a trader, but also from a personal standpoint as well. How's that going to affect you if you have a mortgage on a house, or your general living expenses? Is the shopping going to go up when you go and do your grocery shopping? Are you going? How's it going to affect daily living? And are there going to be more food banks opening up to feed the poor and homeless? And how's that going to have a knock-on effect? And so you try and look at the world as a global powerhouse, and because we are more connected than ever before. And then by doing that, you can drill down and do some trading, because your trading will be more like investing, more like you're clued up as to what's going on. So rather than just following a 1 minute time frame and chasing it up and down like a little puppy, clueless, you have an understanding as to how the world's working and what's going on, and so how's that going to affect the trades that you get in if you're trading, say, a dollar related pair. And so have a handle on that. So for me, I'm thinking pound dollar to 140 to go up to retest pre-referendum highs. So if we can break 137, then it will open the way up for a 300 pip or so move. It's not a lot, is it? So so for me, I'm thinking that bigger picture. And so just to have these ideas, and if you don't have these ideas, this is where you should be spending 80% of your time. And 20% should be trading, so 10% buying, 10% selling, 80% sitting on your hands, researching, understanding what trading is all about. If you're just spending 80% of your time trading and putting trades on and just chasing everything, and then you wonder why you're not making any money, or trying to invest or waste, I shouldn't say invest, waste money on these challenges without being properly prepared and consistent, then yeah, you're doing it all wrong, aren't you? You're just not looking in the right places or asking the right questions, and yeah, so I just shared something. Somebody asked a question today, which was really good that they asked the question, and the question was, what did we do that was, a game changer for us as a trader, and I'm trying to find it now. Does anyone know where it is? There's so many sections, and people just post here, then everywhere now. They don't stick to like posting pound stuff in the pound section. And let's find it. I did reply to it. I think it's relevant, so I just want to share it with you. But in the meantime, while we're looking, anyone doing anything? Anyone long or short? What's your take on gold? Anyone who trades gold, what's your bias on that? Bullish bias or bearish bias? What do you think? Is it going to go up or is it going to go down? You can type it in the chat if you want. There's no right or wrong answer. You can say it's going to go down 10 pips and it's going to go up 15 pips. Okay.
Could you please talk a little bit about the indicators that you have on your chart right now?
Yeah. Yeah, so I have, at the bottom we have where is it? Let's pull it up on the 4 hour, actually 4 hour on the pound dollar. So pull up the pound dollar chart, 4 hour. Actually, I should do a video. I'm sure I did do a video somewhere on my indicators. I'll do another video so you have it as well. 5-minute video just explaining it. So this one's called the Storyteller. A similar indicator you can find more freely available on places like TradingView will be the awesome indicator, awesome oscillator, and the settings for which are 5 and 34, and that just helps to show you the volume. So we break above the 0 line, and that's momentum to the upside, and you'll normally get these bars which you look for about 8 to 12 green bars for an uptrend, and then about 8 to 12 red bars when it breaks below the 0 line, to help you understand momentum. Are we bullish or bearish, etc. So right now we've been quite bullish, haven't we, on the pound, where it broke structure here and it retraced and it's gone up nicely. Then I have the MACD, which is a standard MACD. The settings are standard default. I think they're 9, 12 and 26, something like that. They're standards. And what I use this for, you see the two lines when they cross over, and then we have this separation. So we call this, when it separates, we look for the mass separation. So when they really widen, a bit like a Bollinger Band, a bit like an elastic band effect. So when they widen, they're going to snap back. So it just helps you kind of gauge if something is overbought or oversold, or overextended to the upside or overextended to the downside. Obviously, when a green line crosses over the red line, then these candles will turn bearish, and that helps me to see that. A bit of confirmation, just an added confluence, an added reason to understand if you want to get a trade on and you're going long or short. So it just helps. So MACD standard, and then the bottom one's a stochastic, similar to a stochastic, and the settings for which are 222, simple as that. And all I'm doing with that is it's a bit like an RSI as well. People use RSIs, but this is RSI is stochastic. We're looking at overbought and oversold again. So we're looking at price when it gets up to a certain level, like here. As it, do you think it's finished the move to the upside? Well, this indicator is saying that we have extended up to previous historical highs based on this indicator, going back. And then we have the 50% line, then it drops back down below. So that, again, it's just all about helping me to see, really, better visualize and better see what's the market doing. Is it going up? Is it going down? Is it likely to stall at this level? Should I be getting in here, or does it look a bit overextended? So that's it. They're the three indicators that I use. And so I was just going back to what I was going to say before, actually. So I was having this conversation, and we basically said that, back in the day, I mean, there's algorithms and a lot more computer systems in place now, but back in the day, traders are the ones that made all the decisions, and they still do in the banks. It's not the analysts, it's not anyone else, it's the traders. So the traders are, you don't go to your boss and say, oh, I'm going to buy gold and I'm going to put like 100 million, and he'll look at you and go, and why are you telling me for? Just get on with it. And so, you'll go and do what you do. So you're a trader, you put the positions on, and if you say, your manager will then say to you, okay, just let me know how you got on with it. Just, come back and tell me if you made, how much money you've made, basically. That's all you're interested in. And so with that in mind, all the trader does is they'll say, right, I'm going to buy it here and I'm going to sell it here. That's it. That's all they do. Now, in terms of analysts, the analysts came in and on the scene like in the 90s, early 2000s, etc., and they became, a standard feature. And what they do is they go to the trader. It's not the other way around. They go to the trader and the trader will say to them, I'm doing this. I'm going to buy here and I'm going to sell here. So as an analyst, they will go away and they will have to sort of present this in some posh document or folder or email or something, because they need to then send it off to their investors and say, this is what we are doing, and make it look all fancy. And that is pretty much the job, in essence, of the trader and the analyst that work hand in hand, so to speak. And that is it. And in terms of a trader, what is it they look for? Well, they've got different looking charts. They might have some charts like this, but then they'll have like an order flow, and they will be looking at where the volume is in terms of how many people or how much money is long, how much is short, and make a decision. Is this the right time to take the long? Is this the right time to take a short? So it's not about buying at support or resistance. There's no fibs involved necessarily. There really isn't much in a way of that sort of technical analysis that we all talk about as a retail trader. It just doesn't. They don't really use it. So that's how it works. And so when you understand that, and you understand the workings of how the banks actually operate, you come to realise that it's all just fluffed up. Because at the end of the day, an analyst will need to go to an investor, and if they said, right, well, yeah, the trader, he's going to buy it here and he's going to sell it here, that's not going to fill you with much confidence, perhaps. Unless, of course, you've been with them for many years, and each year you're being given a generous annual return of profit. So that, to give you an insight, is basically what goes on in the banks on a daily basis. And that's what they do, buying and selling, and in its simplest form. Buy here, I want to buy it here, and I want to sell it here. And they can do that because they've got the money to do it. So say, right, I'm going to put 50 million here, or I'm going to put 20 million here, and I'll chuck another 20 million here, and we're looking for it to go to there. And it's not a 5 pip scalp or 100 pips or anything like that. It'll be more like, right, macro picture, dollars weak, let's buy all dollar related pairs. Has Brexit been sorted out? Good. Let's put some money into the pound. Let's listen to what the governor of the Bank of England has to say. If he gives us some good pointers and good information, like he did yesterday, saying that they're not going to entertain negative interest rates at this time. They don't feel that they need to. They feel that that would be a waste of time. That's seen as a good thing for the pound. The pound, basically in England, they're saying, we're all right. We're going to get through this. Times are hard. It's a bit shit. But we're not going to take drastic measures in terms of quantitative easing or stimulus like they do in America, which will devalue our pound further. And so that's seen as a good thing. So that's why I was bullish on the pound yesterday when everyone was trying to short it at 136. I was just waiting for it to pop to the upside, and we jumped on it and we made some money. And that's it. As a trader, you'd look at that and you think, right, I want to do that. And that's all you need to know. So the only thing stopping you from being a successful trader is you, because you get caught up with everything else that's going on instead of just keeping it simple and focusing on buy low, sell high. That's the concept. That's the basic principle of the markets. Now, all the other bells and whistles are just that. They're all just bits and bobs which can be distracting. You're right, Luca. Yeah, so that's it really. Yeah, all good, thanks. Yeah, just finished explaining the basic functions and principles of the stock markets, if you like. Any more questions? We've recorded this. It's worth listening to because
I
it's.
do have a small quick question. So yesterday when you caught the JPP USD trade, were you watching the charts or you have an alert or how
Oh yeah, I was just watching the
do
charts.
that?
Yeah, I was just watching the charts. Let's have a look at a 15-minute chart, okay? Because the 15-minute chart will show you all the noise where I was watching in the forums, the chat groups, all these retail traders that were sitting there bored out of their nut because they've been sat at home in a lockdown and itching to pull the trigger, and they're all just saying, okay, I'm gonna short the pound, I'm gonna short it here. And I'm thinking, okay, but I've just spent 20 minutes explaining fundamentals and saying, well, there's cause for bullish bias because of this, and it's already moved up 40-50 pips ready, and then the US traders come in and they confirm that and they bought it as well, whilst the retail traders were sitting on their hands or trying to sit on their hands, trying to be patient, and those that didn't lost money, and it was as simple as that. And what do we see? I'll show you exactly what we see. Here we go. Like there it is. There's the price action yesterday at around that 136 level. It was just consolidating. So we had the initial move up shortly after Governor Bailey, the Bank of England governor, talked about not wanting to weaken the pound. Basically, that's what he said, not wanting to weaken the pound, so pound is strong, bullish. But for anyone who wasn't paying attention and was just chasing things like a puppy and not really understanding how markets are driven by fundamental information, so to understand that you don't need to look at figures necessarily, you just need to listen to what's being said out there, and it's fundamental news because it's basically going to help you to understand if something's going to go up or down, and so that was telling us that you should be buying the pound right now because it's bullish, and yeah, it's all good. So this is the price action, and this is where I bought right here. I just waited for it to pop, and we got that pop at around 315. So about 320 I sent the signal out, and it went to 136.30 and then parked itself there, pulled back to 136.10, so it gave people another opportunity to get in if they'd missed it, and then it did this, which was really nice. It was very slow, but it trickled on up, didn't it? And we got to this level, bit of an extended level, but it was good. So all good, bullish price action, trailed the stop loss, couldn't lose, made like 4.5% or something. I need to have a look more than that. I think I've made more than that. I haven't even looked yet. I've just been busy this morning. But yeah, there you go. So how's that? Is that good? Someone saying what I see on gold is higher lows but not higher highs. So it's in a wedge formation. Yeah, see, so all these, all the technical analysis should help you as a tool to sit on your hands and do nothing and spend 80% of the time just back testing things, just watching things, and then when it does actually make a move and confirms a move, then you get involved. So again, on Monday we were still in a downtrend on the pound with our divergence that was clearly highlighted, and we talked about it all last week, and straight away people were jumping on it, trying to take longs, trying to call the bottom on it, and which is fine in some respects if you have the capital and you have a decent stop loss and everything else. But trying to get this sniper entry with this, 1 to 100 risk to reward, and it's just it's just daft. Someone says something, and then other people sort of think, oh yeah, cool. It's like the blind leading the blind, and then it becomes a trend and fashionable. And it's like, oh yeah, let's all look at the risk to reward. That's so important. It's the most important thing, and it'll be most important. Yeah.
With the Bitcoin stuff.
Oh yeah, there you go. You said you gave structure to your daily routine. You said, I'm going to do this today. I'm going to put an hour and a half in this morning at backtesting. I'm going to go to the gym, have some lunch, whatever. This afternoon I'm going to do another hour and a half of bit of backtesting. Come the afternoon, you said, yeah, I've just lost money on Bitcoin. It was like, well, where was that in your daily routine? Where did you say you were going to get caught up in the whole, this whole hype that's to do with Bitcoin? Yeah, exactly. So that is what I mean when I say that you are your own worst enemy. It has nothing to do with anything else. Any bells and whistles that you have, the fibs that I use, things like that, it's just to give you an edge, just to help give you some comfort. It's like a comfort blanket almost. It's just to give you something where some people are quite happy just to trade with naked charts, with nothing. And that's absolutely fine. Whatever works for you. It has to work for you. So, yeah, I mean, you can make it work. If something's bullish, it's bullish. And then people are trying to call tops and bottoms on a move. So if you're trying to call the top, trying to call the bottom on the pound dollar move, the bottom is when it's finished. So it's bearish until it's bullish until it's bullish. It's bullish when it's bullish, and if that makes sense, yes. Anyway, that it's bearish when it's bearish. It's bullish when it's bullish. And people say to me, "Is it bullish or bearish?" I said, "Well, it's bullish right now. So what are you trying to do?"
Yeah.
And
I
so
think you are trying to explain that.
just keep
Just
it
don't pick
keep
a
it simple.
bottom,
Just keep it simple. Keep it really simple.
a bottom and a bearish trend.
Yeah, exactly.
Uh-huh.
It's got to be simple. Simple.
The pullback and stuff.
Yeah, exactly.
Okay.
Okay. Right. Any more questions? Hopefully that it's been insightful to give you an understanding, because we have 10 minutes to go. We'll keep it short and simple. Any more questions? Roll up. 3 questions. No, good. Hopefully you guys have gained something from today's session, and I've let you know I'm looking at gold, and I'm interested in it. Like now, it's done a little step down, and if it decides, there we go. My money's made anyway. Today I traded the Dow Jones, and that's given me, as of now, my last position just closed about 10 seconds ago, up to 31,050 area. I cashed out 45, looking for back up to 50. Just like a little simple move done. So yeah, if you guys want to send me any more messages, or you want to, can you enable group chat here? What do you mean enable? Is it not enabled? I don't, I need to have a look. Can you enable group chat here? I'd say use the Telegram group, so we just keep it as one simple form of media where we talk, discuss, share. So I have the 2 Telegram groups. I've got the one where I share all the signals and analysis, so you guys can just benefit from that, and it's clean and nobody else jumps on it and starts polluting it with their bollocks. So you
Alex,
see what's what. Yes, mate.
I got a question.
Go on then.
Uh,
Make it a good one, or you're fired.
I always make a good one. But,
Yeah.
people sometimes say that, oh, this pair doesn't respect trend lines or double bottom or double tops very well. Is that true, or, I mean,
I
for
think
example, GBP USD doesn't respect trend lines, and Audi USD, yes, it does respect. Is that true?
well, no, it's not true, is it? You know yourself. You've seen stuff react. You've seen price react at key levels of support and resistance. The support and resistance that I use, to remind you, is exponential moving averages, of which I use the 8 period, the 21 period, and that's just for like intraday movement. So if we're in a trend, they help keep the trend alive. Then we have the 50 and the 200. That's what I use. And then we have fib levels. We have the fib extensions. So let's go back to looking at
Because,
what's
for
that?
example, if we have a bullish engulfing candle
Yeah.
on any pair, it will be the same, right? It will mean the same. So I
Yeah,
guess
but okay. So put it this way. No, but put it this way. It's a game. It's a game of probability. Nothing's ever 100%. So just by identifying these things that we used and using these tools, to work out how reliable any of these tools that we use, these support and resistance tools, how reliable are they? Well, that's down to you to back test them in a way that suits you. So if you have a strategy, you have to back test it. That's how a strategy is created, yeah, because you're reinforcing that strategy, you're making it work. And all you need, because it's probability that we're doing here, all you need is for your strategy, your ideas, the tools that you use, you only need them to work more often than not. So maybe 60% of the time. You can even have a win rate of 40%. But if your risk management is correct as well, where you're only risking 1% to make 2%, then you should be profitable. So it's again, this is down to you. You are your own worst enemy, because if you haven't got that consistency, or you can't be bothered to stick to your routine. So I've challenged everyone this month to do everything religiously every day. Come in and do the same thing every day. Same thing every day. So you're risking 0.5%, you risk 0.5%. Don't wake up tomorrow morning with a bit of a funny head because you didn't sleep last night, or you went out, or you had a drink, or God knows, and you think, oh, today I'm going to risk 2%. That goes against everything that you're trying to do. It's like starting a diet in January, or dry January. I'm not having another drink for the whole month. I was like, okay, good luck with that. Have fun. That sounds really dead right now. Can't have a glass of wine. I mean, God, why torture yourself? We're in a
I have
lockdown.
a defined 3-minute countdown as well.
Yeah, there you go. And so have
3-minute
rules.
countdown.
Yes, I have rules for that. So say if I lose 3% this week, I'm not trading anymore because I've had 3 goes and it's all
Yes.
rubbish. And there you go.
Because
So
otherwise,
yeah,
I
so
get angry and blow my account.
that's right, revenge trading.
So
So
if
if
I have,
you yes,
yeah,
so look, let me say to everyone, if you can, if you struggle with patience, if you struggle with setting yourselves up with some rules, you don't have the discipline, you don't have the, I don't know, the strategy that you're comfortable using, spend 80% of the time getting all of these things right, and it will take you as long as it takes. And if you need help, you can get in contact with me. And someone's asked me for a Telegram group, so the Telegram group has been shared via Discord and out there, and you can just, I tell you, you can just contact me on Telegram here at, this is my username, at ALX underscore TYW. There you go. So it's short for Alex at Trade Your Way, or you just go on my website and all my links are there as well, and so you can just talk there. So everything's free. It's always free. Everything we do is free, and we will do it all free for the next year, 18 months, and then sayonara. I'm going to go put my feet up on a beach somewhere and sip on tequilas and God knows, I don't know. I don't know. We'll see. See what happens. But yeah, there you
yeah,
go.
enjoy life.
Yeah, that's it. So let's get out of these doldrum times with all of this lockdown, depression, and it's very challenging times for everybody right now. Very sad. So yeah, if we
What
can
was
make
the hammer candlestick?
a what?
Hammer pattern.
I don't know. Now you're talking about stuff that you're just throwing stuff out there. I have no idea. But look, I think
Hammer pattern candlestick.
I don't know. Send it to me in the Telegram group. Don't save it for here because no one knows what you're on about. The only Hummer I know is the last time I saw a Hummer, it was driven by it's driven by a few Russians.
15-minute
Wait,
time
wait.
plan.
Sorry.
Your mix is
Sorry.
very.
Hold on, Luca. Let me mute you for a minute. You're taking up all the limelight. Right. So what were you saying, Kishan? Chaos. Right. Let's unmute. Let's unmute you there.
I
Yeah.
think it's going up. It just made triple top on 15-minute time frame. So I'm
What?
guessing it's
What's that? What?
testing the resistance.
What are we talking about? What instrument? What pair? What forex pair?
GBP USD on
Oh, pound dollar. Yeah. Okay.
GBP
Yeah.
15-minute time frame.
Yeah. Yeah. What do you want to do with it, or what do you
It's
think's going to happen?
I think it's testing resistance. So it is gonna up or going down. I'm just biased.
Well, I said yesterday about the reason why we took longs on it and explain that as well. Watch this video again and go over it because I did the analysis for it, and we've got less than a minute left on this session. It's going to time out in a minute, so it's just enough time to say thanks for joining us, and hopefully you've gained some important information and some more
Okay,
knowledge.
I will watch it again.
Yeah, do that, and I'll have that uploaded and available to you all very shortly. Get in touch via Telegram, message me that way if you want to share any charts or analysis or you have any questions, and we can connect that way, and I can help you, no problem, answer any questions. All right, take care, everyone, and thanks very much for joining us. And as I say, I will have this available to you very soon, so you can watch this video again because
Bye,
there's
Alex.
lots of
Thank
good
you.
info. Yeah, no worries. Take care, everyone.
Thank you.
See you later, traders. All the best. Bye.
Inshallah.
Bye, mate.
Have a good day, Alex.
And you, bud. See you later, YouTubers. Is patience really a good thing in trading? Oh, yeah, of course. Sit in your hands 80% of the time and trade 10% long, 10% short. That's what they say. 80% should be self-development, back testing, making sure that your strategy is working. Instead, it's always the other way around. Everyone spends 80% of their time trading and they don't leave anything for themselves to actually learn. It's just trading, and over-trading.
Yeah.
That's just the way it is. You need to sort of switch that around a bit. Yeah. Okay. Hi there. I was here. Thank you.
Have a
Hey.
great day,
Hey, Zen.
Alex.
Yeah. No worries. No worries. Take care, everyone. Have a lovely afternoon. I have to go and do some homeschooling now with the kids. Ah, it never ends.
Homeschooling? Wow,
Yeah.
great.
So teach you
Great.
kids and then teach my kids. Yeah.